So clearly the headlines from the spring forecast were around the welfare cuts, but for investors I think the focus is on the spending announcements. So that premise of becoming a defence industrial superpower is really interesting from a UK investor perspective. The 2.2 billion in spend over the next financial year, really super positive for the likes of BAE, Babcock, Rolls-Royce, Chemring, etc. And notable was the sort of UK-centric message around this. Talked about opening up contracts to small and medium-sized enterprises in the UK. And this is an industrial strategy that should create jobs in the regions. This is not a London-centric package of spend. This is really creating jobs in the region, so should be positive for growth going forward. Also key to the statement's projections over the medium term were those house building targets. And to go along with those, they announced the £2 billion spend on social housing almost immediately, and also talked about the planning reforms. So the planning reforms have been given more substance by the OBR after apportioning growth impact, having now seen the details. So that is good news, and potentially positive for the likes of the UK house builders, including Persimmon, Taylor Wimpey, Barratt Redrow, etc. Should point out, however, that the share prices have been under pressure as they've been voicing concerns around those greater cost pressures that pretty much all industries have seen recently. So not a clear-cut story there in house building, but overall positive spending announcements. In terms of potential challenges on the horizon, well, by sticking to her fiscal rules, the market has initially at least reacted neutrally to the statement, and borrowing costs have remained stable. So that is effectively a positive, but it still remains a challenge. There isn't much headroom in the numbers, and any shocks are likely to mean further spending cuts or the need for coming back in the autumn for tax rises. But the short-term downgrading growth is obviously a negative for UK PLC. But as I said, I think in terms of the positive growth forecasts further out, they do offer a ray of hope. And all eyes are going to be on that execution in terms of the defence and house building spending as the UK looks to reignite growth and relieve the pressure on those public finances.